The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 21st Thankful Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading uninspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call Giving Thanks Opens the Door to Growth. Now, does the name Benjamin Weir ring a bell to you? You know, a week from today, most of us will be celebrating Thanksgiving. And Benjamin Weir's story is one we can all learn from. For those of you who can't place a name with the circumstance, Ben Weir was a missionary in Lebanon for nearly 30 years before he was kidnapped off the streets of Beirut in May 1984. And his book, Hostage Bound, Hostage Free, I recommend that you get it out there, Hostage Bound, Hostage Free, described how he used the chain that bound him to a radiator by counting the links of that chain each day to count off and remember all the things for which he was thankful for. Yes, he really did use the word thankful. He described his day by saying, when I awakened each morning, I usually could hear the birds twittering or the dogs barking or the sounds of life going on. And he would respond in a spirit of thanksgiving that the universe had given him yet another day of health and another day of strength. You know, there can be no doubt that in Ben's situation, Thanksgiving truly did open the door to greater growth. Picture this, folks. Ben was held hostage for 14 months in solitary confinement. So for Ben, Thanksgiving was celebrated each day, and to this day, he remains one of the world's most respected voices for peace and reconciliation in the Middle East. Pretty amazing. Pretty amazing. He was later freed by the exchange of anti-tank weapons as part of the Iran-Contra affair. Perhaps now that rings a bell to you. But as Ben said, each day was Thanksgiving, and he had an attitude of gratitude. Folks, modeling others is the fastest way to learn. And each day we can model Ben and begin with the attitude of gratitude. The heading of my newsletter of Mastering Probability says live with gratitude. The necklace that I wear around my neck says live with gratitude and passion. Our man Larry P., he says live each day with an attitude of gratitude. We all really get it from the same place. You know, what I call the laws of life for giving and receiving. The law states give and then receive, not receive and then give. Yes, folks, next Thursday is Thanksgiving, but imagine our world in which each day we gave thanks first. You can do it. You should do it out there. Imagine a world where our focus could be transferred from perceptions of lack to an appreciation of the abundance that each of us have in our life. Oh, yes, one thing each of us has is abundance. No matter what we do or we don't have, we have abundance. And that, as Tommy likes to say, that's a beautiful thing. Be thankful for the smallest thing. The smallest thing. And guess what? You'll receive something even greater in return. Folks, I am thankful for your presence here today, and there's no doubt in my mind that giving thanks opens the door to growth. So let's go check out the growth in the markets out here. The markets are thankful that the printing presses are going. You talk about an active day yesterday. We had the Fed minutes out. You had the ECB talking about printing. You had the Japanese Bank of Japan talking about printing. So all of that printing stuff should be out of the way. We get back to normal markets. So let's really begin where we began yesterday morning out here, and that was taking a look at the euro, Japanese yen. Yesterday, it was trying to break out of this consolidation pattern, and then was quickly reverted. If you were listening on the show at about 10:30, we watched the Japanese yen. We watched the euro Japanese yen is really what I should say, move south while our futures were moving north. I went ahead and promptly tightened up my stop, closed out that, well, I let the market close that out, and then eventually went short that day. I am now, actually right now, totally flat on a trade. And if we do take a look at the euro Japanese yen as we speak right now, it is trying to break out above this consolidation. Look, a break above this consolidation level. You want to talk about a tide lifting all boats. This tide right here will lift all boats much further north out here. But what we have to do is we've got to go take a look at the intraday chart out here to see what's going on. So let's go begin by taking a look at that. And what we can see here right now is that price is on its way to the 1 to 1.618, A to B equals CD pattern. And that is on the 30-minute chart that we are looking at right now. That price point objective, give me a moment here. I want to delete a couple of things. The price point objective about 136.02. You're about 135.96 right now. We'll see. Let's take a look at what the expansions are, where the actual butterfly pattern in this currency pair here will go ahead and complete. Well, I should just leave that like that. Let me just shorten up the chart here. Sorry about that. If we shorten up the chart, the 1.272 butterfly, that doesn't stop until you get into the 1 to 2 A to B equals CD. So right in the 136 level. Now, it actually makes sense that that is where price would travel to. If you're watching us on TigerTV, you're taking a look at my screen here, you'll see some blue horizontal lines going across the screen. That's actually the primary trading range boundary lines here for the euro Japanese yen. You can see it's up above the area of resistance here right now. It hasn't come back and tested it. And testing is really where we're going to get some information with regard to these markets, with regard to what's going on. Because if I switch back and forth and we go take a look at the daily chart, and look, folks, paying attention to this currency pair, more important than you could possibly imagine out here, trying to help guide us as to where the markets are going to go. And when you break out of a consolidation, which it's attempting to do for its third day in a row here, I don't know if the third day or the third time is the charm out here, but we're going to find out. And when you break out of a consolidation, what you like to see is you like to see it come back and test that area. Well, that, in essence, is what we're going to see at some point in time today, because if we take a look at the top of this consolidation, we're going to say it's right around the 135.50 level. So now let's come back out here and take a look at the euro Japanese yen. 135.50 is the number. That takes us all the way back down into about the it'd be a pretty decent retracement. Well, let's take a look at it just simply on this leg right now that it's trying to paint in here. Let's take a look at the retracement, and that's what we're really going to be paying attention to, is whether or not as it moves down to that 135.50 area, I'm going to assume it's going to go ahead and make its full objective of the 1 to 2 out here, and we take a look at that. That 135.50 gets us down to about the dead cat bounce, maybe about a 50% retracement, not all the way down to the 0.618 area. So we can see here, if we're looking at the 30-minute chart, we can see here that it's moving into that extreme bought condition. It has done that several times during the evening out here. It did it once at 2:30 this morning. I shouldn't say during the evening, really 2:30 this morning. And it got up to that area. Nice big bearish engulfing, wide-ranging bar on the way down here. Of course, that was being met by a wide-ranging bar that took place at 1:30 in the morning. So we had a little battle here between the bulls and the bears. Well, guess who won this battle? Very clearly on that next session, it was the bulls that won that battle out there. Price continued to move further north, moved back into an bought condition. We saw the bears show up again here at 6:30 this morning. Promptly, they were overtaken. So the bulls are out here with regard to this currency pair. And you can see here, no bearish reversal sign right yet. So 136.02, more likely the 136.35-ish range where it would form a butterfly pattern. If I go ahead and paint that in for you, you can see. That way it will also give us, oh, geez, didn't mean to do that. Let's see here. Come on, baby. Work for me, would you? There we go. Okay, so we'll draw in that pattern here. Here's what the 1.272 butterfly pattern here looks like. So that takes you up to about 136.35. Now, let's just simply go back to the daily. What's 136.35 do for us on a longer-term time frame? Actually, let's not go to the daily. Let's go to the weekly time frame out here. So I don't lose all of this, let me just switch over to this currency tab out here. And let's go that's the U.S. dollar Japanese yen currency pair. But let's go take a look at the euro. There we go. The euro Japanese yen still have from yesterday's chart, which shows the breakout. So 136. 153.72, yeah. So if it does break out, folks, at 140.98, that's your 0.618 level. So if what we see out here, it's a weekly chart that I've got on my screen. So just to lay this out for you, what we want to be watching is we want to watch to see if, in fact, this consolidation pattern holds. At some point in time here, we're going to see a retracement. And it's that retracement that is really going to go ahead and give us the clue as to whether or not these markets are going to go ahead and power on and move higher out there. And all we can do is each day, take the information, each moment, take the information that the market gives to us to make our trading decisions. But this is one of the key ones here. Probably can't spend enough time on it. I can draw the charts for you, and I can show you the parallel or the correlation that it has to our markets out here. But if this currency pair is moving higher, guess what, folks? So is our markets. It has no choice. It has no opportunity. If we take a look at yesterday, a little bit of a scare out there. If we take a look at the VIX index, which finished unchanged basically yesterday, closing out at 1340. We haven't talked about this on the morning shows. I got a couple of emails yesterday, so I just think that it was just good for me to bring it up on the morning show here, and that's the 50-day exponential moving average. That's the red line going across my screen in the upper portion of the upper quadrant of the chart out there. That's the actual VIX. Down below is the S&P 500. When the VIX gets above that 50-day exponential moving average, that's where you start to see some real carnage. So we've got an area, and you can see that yesterday it got really right up to the top of that level. The 50-day is 1401. We saw a high yesterday of 1394 out there, rejected that level, but we're close. It's at 1340, so we want to absolutely be paying attention to that. Is this going to be a pop and drop like it was yesterday? Well, what we can take out of the equation here right now, I think we can take out of the equation comments by the Fed, comments by the Bank of Japan, comments by Super Mario. Now we're going to see what buyers and sellers want to go ahead and do with this information. Right now, Dow futures are up 50, S&P up 4.5. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures are up 49 points right now. They're trading at 15,928. S&P is up 4.5. The NASDAQ Composite up 14 points. Russell 2000 up about 5 points right now. And let's take a look at the U.S. dollar, Japanese yen for the moment out here. This thing here has formed, if you're watching us on Tiger TV, two real nice Gartley patterns out here. The last one that had formed had a nice 1.618 expansion. It was an 84% move out there, so not your 0.786 style, but still a nice 1.618 expansion of its B to C swing point out here. And that now has formed the A point of a large A to B equals CD up that is in play out here. Right now you can see that it has moved through the 0.1 to 1.618 level with a nice wide-ranging bar. Now it is getting into that extreme overbought territory out here. It can still run a bit higher, but we should see a move sideways to work that condition off, maybe a slight pullback. At this stage here, we haven't seen any kind of bearish reversal signal inside of this, really, ever since it made its C leg as it was moving up. Little key, not even a key reversal session right here on November the 7th. So this wants higher price. Now, that's what the daily chart shows. The daily chart actually shows an A to B equals CD up that could take it all the way back up to the highs here from May in 2013, right in the 103 level. And that's what the daily chart shows. If we take a look at the weekly chart, talk about a currency pair off of its bottom. It most certainly is this currency pair all the way back September in 2012 out here when it last saw a low. Looks like that was a nice hammer candle right down here. Boy, that was a beautiful signal, wasn't it? September the 14th, nice big type 1 style hammer candle. Came back 2 weeks later and tested the midpoint of that area, and then it was just simply off to the races. And if you take a look at this rising price channel, it is to really, I guess what you would call here is a subcorrection price channel, because if you take the U.S. dollar, Japanese yen, all the way back out to the highs in 2002, you can see that this the blue diagonal line, if you're watching us on Tiger TV, you can see how that channel line here, it's marked simply by the area in 2002 as well as the areas here in 2007. And that is where the U.S. dollar, Japanese yen is headed to. So they're saying, I got my printing presses rolling, and rolling is what it's going to do. Of course, its next stop, where it will take a pause, should be that 100% move of a move. It's the A to B equals CD on the weekly chart. It's back to that swing point here where we saw a reversal pattern, a bearish engulfing candle. That was on May 24th, the week of May 24th. So that high 103.72 looks like it is where the U.S. dollar, Japanese yen is headed to. If we take a look at the queen out here, the queen bee, queen mum, still holding that support line. Used to be old resistance. We saw yesterday how it came right down into that level. That's the black horizontal line going across my screen. We're using the threshold level, the high of about 1.3414 out there until it breaks through that. And right now we've seen, in essence, 2 tests of that area, and so far it is held. Now, if it doesn't hold, It's got an A to B equals CD down that will take into the 1.3063 range out here. But so far, that area is holding. They like to see several tests of that, and we have seen a few. We saw a test here on November 14th as well as November 13th, yesterday really, and today. And you got to be willing to move that black line up and down just a tad out there. So that's the level where the Bulls and the Bears, where Uncle Mario Draghi is hanging out at the moment. So that's what's really going on inside the soft currency pairs. Let's go see what's going on inside the hard currency pair out here. Let's take a look at Goldilocks. Now, gold yesterday confirming an A to B equals CD down. It says we should see gold move down to the 1178 area. That's going to be your swing point from June 28th, 1179.40. Still down below the last swing point, the B point of the A to B equals CD down. That's the October 15th level that we're using as our A point. We're using that resistance as it ran in that descending price channel resistance. That's the A from the August 28th high, 1434. The B point being the low here on October the 16th. Nice, about a 50% retracement or so, right into resistance. A little doji. Leaves fell off the tree on that very next candle session, setting up the move lower out here. Volume-wise so far today, looks like about 95,000 contracts. So there is volume still to the downside. Looks like a confirmed trend lower inside of Goldilocks. If we take a look at silver here this morning, it too has a to B equals CD pattern that it's trying to complete. It says 1846, but right now the move off of the C point, stronger than gold, and it really says, in fact, let's take a look at the, let me do this. Let's take a look at the expansion of the swing points. Maybe what silver will do here is form a butterfly pattern. So let's take a look at that expansion, because what it looks like to me is more than a 1-to-1 A to B equals CD at the moment. 1847 is your 1-to-1. 1737, that's your 1-to-1.272. But right around the $1630, that would form a nice little 1.272 butterfly. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 69 points, trading out at 15,970. The S&P up 7, trading out at 1788. Composite up 21 points, leading the charge percentage-wise, up over 0.5% this morning. It's trading out at 39.42. Russell 2000 up 4.5 points, trading out at 11.04. Apple up $3 and change. Microsoft up 33 cents here. Green Mountain Coffee Roasters trading up a nice 12% this morning, up $7 and change. New Skin Enterprises, NUS, up 4% here. Probably both of these out with numbers. Let's see. Green Mountain Coffee Roasters, they declared, what did they declare? A dividend? Declares a quarterly dividend of 25 cents payable February 14th. For those having the equity on January 17th out here. Let's see, their Q4 profits were up. I don't see what the numbers are, but the stock is leading the charge, the upside. New Skin, as I mentioned, up about 4%. Let's see if they've got numbers out here that I can readily see. Looks like they were posted earnings per share of $7.25 to $7.50. That's not what I was looking for. Come on, where are you? Nope, I don't see it. In any event, you got Williams and Sonoma, WSM. They're up 6% here this morning. Apple is up a few bucks. Cardiovascular CSII, that's up 8%. Johnson Controls up 5%. Stratasys, a little relief valve. Boy, those 3D stocks took a hammering yesterday. Stratasys is up $2 right now. Voxeljet down. That's the one that really took the hammering down, I don't know, off of its highs in 2 days, 50, 60%, something like that. It is down this morning another 12.5% off $5 and change. Liquidity Services, LQDT, that's down 17%. Boy, that thing is getting hammered. I don't know if that's still in the IBD 50 or not, but after today, probably not. It did net income of $10 million versus $5.5, so nice job there on their Q4 net income. Don't know if there are any adjustments or anything there. And our top-line numbers, I don't show their top-line numbers. In any event, they're getting hammered here this morning. Not the kind of hammering you go when you go to the bar. This kind of hammering where sellers are out there in full force, it looks like, in Liquidity Services. You've got American Railcar, that's down 9% this morning. GameStop off 6%. Dollar Tree down 5%. Target off about 4% out here. So what we're going to start with here is we're going to take a look at the 120-minute chart for the ES Mini. I filled in for Tom while he's over at the Trader Expo in Las Vegas. And so I filled in for Tom last night. And I believe this is one of the charts that I showed, which was the 120-minute chart for the ES. And we talked about was how yesterday it broke this little rising price channel, and that when price breaks any kind of trend line, any channel line, what it's going to try to do, it's going to try to get back inside. And this is really the stock chart that we want to be following here. So it's the 120. You can see a nice rising price channel, really well anchored. So it doesn't get too much better than this. This is coming off of the lows here from back in October. So we're going to use October the 9th. I'm using the session. You can use either the close at 1:30 or the open at the following session on October the 9th out there. And your next area that you're going to be using as your touch points, use the open at what time? 1400, 2 o'clock in the afternoon out at the 1757 level. That's going to lead you right into very close to the open at 10 o'clock in the morning on November 13th. Now, what we can see here, price broke through that level. I've blown this up on my screen. And right now what the ES Mini is trying to do is trying to get back up inside there. Now, knowing that the Euro-Japanese yen on its intraday chart is in the extreme overbought condition out here. At some point in time, this thing needs a little bit of relief. Now, that relief can just simply come from a move sideways, a pullback, or what have you. But we should see in tandem the currency pair, the U.S. dollar, Japanese yen, in tandem working with the ES Mini out here. Now, the ES Mini on a 30-minute chart, it's really kind of at the midpoint of these two blue horizontal lines going across my screen are really the primary trading range boundary lines. And so 1791 should be a significant area of resistance if, in fact, we see it move up to that level. That's about another 5 or 6 points higher out here. It really all depends what happens here with regard to the Euro-Japanese yen. Now, going back to that 120-minute chart, and how you pay attention to it and how you focus on it is if price is able to get back inside it, and then we start to see that pullback in the Euro-Japanese yen. The question is, what happens? Does it break? It's already broken the ice. The question is, how solid is this ice here? As price right now, it's acting pretty solid as it's not letting price get back in. But that's really where the tug of war, the battle is on right now for us to be paying attention to in the markets. In my opinion, that is one of the places to really pay attention to in the markets. Because if price gets back inside this and it gets above the 1790 range out here, that's, again, that primary trading range line out there. Not only will we see a move to the 1799 level, but so long as the breakout session stays in place inside that Euro-Japanese yen, it'll just simply fuel the markets higher out there. So a little bit of a market that gyrates both to the upside and to the downside out here. The daily charts, as I take a look at them, a couple have given sell signals, such as the NASDAQ and the Russell 2000, but the Dow is not, and the S&P has not either at this stage. So we've got the real battle between the bulls and the bears, and this is the line that you're paying attention to right now between a battle of the bulls and the bears. Now, this is a 120-minute chart. That means that this doesn't close till 10 o'clock this morning, and that at this stage of the game, it's acting as resistance out here. If I take a look at some of the other currency pairs on the longer-term charts, if we take a look at the Dow, and we should take a look at the Dow price yesterday, came down, rejected. Again, it's using really the same channel lines out here. It's coming back into the October 9th time frame, so you can see the touch points. We did see that area pierced here once. That was at 9:30 in the morning on November the 13th, and immediately got back inside the price channel out here. Well, we saw it try to be pierced yesterday. It wasn't. It pushed down into the 2:30 time frame out here. We did see it move to a little bit lower low. That was at 11:30 last evening. And then the Japanese Bank of Japan came to life. I'm not sure. I think it was around 1 o'clock in the morning or so when they came out with their news that, hey, no problem buying trillions of dollars in bonds in our marketplace out there. So you've got the Dow. And we want to pay attention to this, too, because if the markets are going to roll over, truly roll over, you're going to need to get the Dow to participate. Even though it's only 30 stocks out here, you're still going to need to see this break its price channel line. And at this stage here, it's rising price channel line, I should say. And at this stage, it has not done that. So we know what we're looking at both in the Dow. We know what we're looking at inside of the ES Mini. If we take a look at the NASDAQ, well, the NASDAQ here, this is the one where I've said, okay, it's giving you a nice confirmed sell signal here. It broke through the rising price channel, came back and tested it and rejected that area here. And if we take a look at the trend right now, you can take a look at a trend line of the NASDAQ. You can see price here this morning moving right up into that area of that trend on the 120-minute chart. So it has not broken the trend line that you would look at. We could also try to paint a correction channel that may be forming out here just by taking a look at the see what we can find here with regard to if we have enough touch points. We're pretty close, I suppose. Let's see if you would use probably this area here would be our, we'll paint that in red. So that would maybe be an indication here that on the 120-minute chart, if we just take a look at our channel line, that the NASDAQ itself is trying to break through that little correction. At this stage here, you can't say it is a ton of a trend to the downside, but we do know that it broke out to the downside here, and it is the weaker of one of the weakest of the indices out here, and that's the NASDAQ. So, but we'll pay more attention to the Dow and the S&P 500 than we will the NASDAQ for our next signals. Of course, let's not leave out the Russell 2000 here. Go see what it is doing. The Russell 2000, which have been pulling back nicely, if we come back into its price channel from October the 9th out here on the 120-minute chart, what we're going to see is yesterday as price moved lower, and the Russell has given us an indication of it being weak out here. What we're going to see here inside the Russell 2000 is a push lower yesterday. Guess what? It ran right into that uptrend up the rising price channel out there. And so far that level has held. So we've got really three good areas to be able to look at with regard to this market and whether or not there's going to be a breakdown. Well, we've got that fourth for sure, and that fourth is going to be coming from our Euro-Japanese yen, which right now you'd have to say, boy, whatever that bearish candle was yesterday, that has been overcome by the bulls today. They don't care about that stinking bearish reversal signal yesterday, and if it can stay outside of this consolidation level, no other choice but to say these markets will motor higher out there. Let's go take a look at some of these stocks here that are popping and dropping. Let's go take a look at what's up in the marketplace. That is Green Mountain Coffee Roasters. GMCR is the ticker symbol. Let's go see what it's trading into when it's got some nice volume behind it as well. So Green Mountain Coffee Roasters, and this was a equity that at one point in time truly got roasted. It went from a high down here or up here at about 116 or so, made a high volume low. This thing broke down, got all the way down. Well, it actually got down to the lows of about $18. How's that for a roller coaster ride? From around 114, 113, 115, all the way down to $17 or so and change out there. Whoosh! That is quite a move. Nonetheless, let's take a look at what it is done right now. Number one, it is it repaired this resistance level of this gap down that takes you back to March 9th out there. So that was a resistance level. It had gap down with about 22 million shares. And as price got up towards that area, guess what? It broke out with 26 million shares. So that window is really gone. Now, the black line coming across the screen, we can see here that it's really not that line that you'd be paying attention to. We're going to get rid of it. I'm going to also get rid of these two moving averages that are on my screen here at the moment. Let's just clear this out. And if we take a look at this thing when it broke out, all that the equity did was it came back to its breakout area. The breakout area was the bottom of the swing, or the bottom of the candle session, because it wasn't a swing point. It was May 8th. And the low of that May 8th candle is 57.76, 8.9 million shares there. Guess what? It came back and it tested it with 4.9 million shares on November 13th. So it came back to the breakout area, and now what we're seeing this thing move higher, and it's doing so with conviction here this morning. Volume-wise so far, 4.6 million shares to the upside. So whoever was in play here, fund-wise or what have you, you can see that they are supporting this equity on the pullback into that area. So they are still in here. They are supporting it. What does that mean? Well, what that means is that as soon as price can get over this little selling intensity that we saw here on October the 9th, volume-wise there was about 10 million shares, but today with it being up with 4.5 million shares in total of 6 minutes of trading, I think that those bulls will be able to overcome those sellers out here, and this thing should move all the way back up to its highs again, which is about $89 and change. That is on Green Mountain Coffee Roasters. We take a look here at, you got Nu Skin. Let's go take a look at Nu Skin. NUS is the ticker symbol. That's up 4.5%, trading out at the 120 range out here. So this thing has been and still is one of the IBD flyers. It is trying to break out. Had a nice sign of strength out here. So a high volume high. That high volume high has been tested a few times. Well, guess what? It's being tested again here this morning. That's the high from October 22nd. 119.46, 5.7 million shares out there. It has done today 383,000 shares. So not the exact type of, not the same thing as what we've seen here in Green Mountain Coffee Roasters, the exuberance to the upside. But, coffee's waking up. And Nu Skin is not just yet. Nonetheless, if it can, what it did do, the beauty of this thing here, if you really take a look from a technical picture, the actual B point of any A to B equals CD point was the test of that high volume high, and then it pulled back, and that is the October 30th candle, 120.82, only 2 million shares out there. So all it really needs to do is clear that 2 million share day, which it's going to do today. As we took a look at that volume, and as long as it closes above 120.82, it's off to new heights. Let's take a look at a weekly chart here on New Skin, and on a stock chart like this, where it's headed to, Lord knows. There's really no pattern that I see that you could place on this thing, well, other than a momentum pattern. But this thing does not, and that momentum pattern of strategy just simply is something that will give you buy point areas and where you should tighten your stop. But boy, on the weekly chart here, not a lot of bears inside of New Skin, and it's going to break out above any bearish signal here, which is how it's trying to, which is going to be that high from November 1st, 120.82. But where this thing is headed to, only, and I don't know where it's headed to, quite frankly. Let's go take a look at the Voxel Jet. Let's go take a look at this thing. Big time downside yesterday. This thing, VJET, a nice call by David White here at TFNN. David caught this on the short side. I don't know if he's still short or not, but it doesn't matter whether he is or he isn't. He was short yesterday, that's for sure, and the day before, and he rode this thing down from somewhere, where I don't know exactly, but this thing made a round number high, one of Basil's round number highs at $70, and then this thing fell off the planet of the Earth. It's coming all the way back now into its original IPO day, which was from October the 18th. So this thing went from stardom to dumbfounded. With big volume to the downside, broken very quickly here. And that is a Voxel Jet, traded out right now at $33.58 out there. Let's go take a look at this liquidity resource. We'll do that when we get back from this breakout here. LQDT is the ticker symbol, and this thing has volume to the downside. Looks like it's second break to the downside. Right now, we've got the Dow at 52. S&P's up about almost 6. We'll be right back, folks.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow is up 54 points right now. S&P is up about 6, trading out at 1787 out here. Had a question inside of the Tiger's Den from Mike K. asking about IWM. He's looking to make a short play here inside by going along the TZA. Now, the Russell 2000. As we mentioned during the second segment, I believe, we were taking a look at the 120-minute chart on the futures contract for the Russell. Now, I've got the IWM up on my screen. I've got some of my proprietary indicators out here, and the Russell is it's what I call the yellow zone. It's just nothing more than a cautionary zone. It means if you were long the Russell 2000, you would have tightened up your stops here, but we really haven't gotten the so-called sell signal inside of the IWM. And I would do this. If you're looking to short the IWM, what you actually need is you need certainly all the markets to participate and go along with you. If we take a look here at the SPY is actually very far at this stage from giving an actual, it's given a maybe a sell signal. I like Basil's terminology, signal versus a mode out here. Most certainly, as I take a look at it, is not in a sell mode whatsoever. So you got the SPYs that are certainly in a cautious area, but not a chance that they've given a signal out here. The diamonds, well, we know that they've actually taken over as the strength inside of the marketplace, so they're not giving it. And if we take a look at the Qs here as we speak, the Qs, they too have given a signal, but not really a mode here. And so you need to start seeing these, you really need to start seeing these markets work in tandem with each other. What I would do if it were me trading the Russell 2000, I would go back to Stevie's 120-minute chart. I would go ahead and I would mark this on your screen. I would get access to the Russell 2000, and I would say your next opportunity to go ahead and take a short on this is when it breaks, if it breaks, this rising price channel. Because up until now, it's got a really nice cemented rising price channel. You're just simply using the open from the session of about 1:30 in the afternoon. That's on October the 9th. Use that as your touch point. Use the next open right here at about 11:30 on November the 8th. Price came down and it tagged that area out here. And I would wait for the market to prove itself. Look, you always like to be able to sell something at a higher price out here. But at this stage, having price so close and knowing that this trend line here has held, knowing that we see some real strength out here inside of the euro, Japanese yen, and that this might be breaking out. What we do know is that this currency pair needs to work off the overbought condition, and that's what it's doing here right now, just as it did yesterday. Out here is it's really going to be important to watch how this thing works. Now, I'm not saying you can't take a trade on it. If you do take a trade on it, then by all, for what you really also need to do is come back here and make sure that your stop, you don't need to give it much in the way of room out here, but make sure that this thing cracks and it breaks the rising price channel. You can go into the intraday chart, into a 30-minute chart, and try to identify those same trend lines out here. I don't think I have it drawn. Yeah, maybe I do have it drawn out here inside the Russell. Let's take a look at it. Yeah, so there's the black diagonal line going across my screen out here inside of the Russell. That's the same line as that 120-minute chart. What we can also see about the Russell, though, you can see what it has done here so far this morning. This is the futures contract. It's broken above this little descending price channel that it was traveling within out there. So I say you've got to be careful and let the market go ahead and prove itself to you. Folks, it is Thankful Thursday. And if you're off to start your day, I want you to have just an incredible day. Give thanks to the smallest things and the biggest things in your life out there. And always remember, you have an amazing power within yourself. And that power, it's so strong, it'll create a life of abundance. It'll cure incurable diseases. It'll build billion-dollar businesses, paint magnificent masterpieces. But most of all, folks, it'll create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day. Take care. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve. Yet, you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.